Hello, everybody. Welcome to week one of what it's like to be an accounting intern. Um, Today's week is the week of January 24th, 2026, and I started Monday of this week. It's currently Saturday, and I'm going to be explaining what I've learned as an accounting intern and trying to explain it in the best terms possible. This is an assignment for one of my classes, but I will also post this to YouTube. Anyway, starting out. Day one, or Monday, I started with what we call bank reconciliations. And bank reconciliations are something that we do in order to make sure transactions are correctly uh, inputted. Uh, and how it works is if anyone has a bank account, the bank is going to keep track of the transactions that happens. And at the end of every month, they're going to send you a bank statement, which I'm sure anyone watching this video will completely understand. Now, the thing is, when you're a business entity, you generally also keep what's called the book. And the book is your journal entries and your general ledger. And these are documents and or programs that you uh, manage your own transactions. So what this does is it makes the book transactions and the bank transactions. And basically a bank reconciliation is where you take those book transactions and the bank transactions and you compare them to one another, see if any match up. If there's some that don't, you see if they look correct or if there's something wrong with them. Uh, and you confirm that, hey, these look all right. So the bank reconciliation is going to say that everything is evened out. The bank is um, has the right numbers, and so does the book. So it basically matches everything with everything else. And that's what I did day one. Day two, I also started working on my QuickBooks certification for bookkeeping. And bookkeeping is basically where accountants record the transactions. A bookkeeper is an accounting position, usually early on. As I'm an intern, I am training to hopefully become a bookkeeper as well, and then move on with my degree and finish up my bachelor's and get my accounting CPA certification or certified public accountant. Now, the second day, what I did was I worked on QuickBooks Academy to learn how to uh, do bookkeeping tasks. And generally, it's just a review of the basic knowledge I have from my current college classes, which I am a sophomore or rising junior, um, almost finished with my associate's degree. This is my last semester, and then I move on. So, basically, all I'm doing is review, and that's definitely a lot of fun, to say the least. And then the third day, I think I finally touched a different client. So, for the first 2 days, I was working on one client. I can't name them or what they do, um, but to sum it up, is uh, a good business, a decent business, to say the least. And did their bank reconciliations the first day, but also went with the CPA on the first day to the client's location, and we pulled their files in order to reconcile. And the second day was just at the office alone, where we finished the reconciliations. Um, I started working on the QuickBooks Academy, and then after I was done working on the QuickBooks Academy, I got through a couple lessons, or a handful of lessons, and then I think that's when I started working on a different client, and then I started working on that client through Wednesday. After I was done with that client, I went on to do QuickBooks again, sort of like my in between when it comes to clients. And then after that, I started working on the same client. So the second client, I worked on them again after I was done on Wednesday. And then Thursday, I started on a new client. and their books were pretty fun, to say the least. Because there's a certain thing that comes with client to client relations that the two CPAs that I work with are teaching me. Um, is that different clients will want different things. So, for example, one client may allow us as the accountants to have full access to their bank accounts and bank records in order to make sure that we can do our work almost autonomously from them. But other clients want to confirm their transactions themselves. So, this was the deal with this client. And basically, I was stuck for like 30 minutes without any bank reconciliations to do. But afterward, the client actually went in and did his own confirmations. So that was fun, to say the least. And I managed to finish up majority of the bank reconciliations on Thursday. But on Friday, I finally finished up those last ones and went ahead and started working with, I believe, a fourth client. And once I started working on the fourth client, this is where things get a little bit tricky because I did finish the bank reconciliations, and then the CPA who was in charge of me actually began to introduce me into a new subject, which is analyzing the statements. Now, what I can say about the fourth client I worked with is that they are non for profit. So, non for profits often work differently from regular businesses, and the fact that the statements are going to be labeled differently. So, for example, in accounting, the main financial statements we make are the balance sheet, the income statement, the statement of owner's equity, and the statement of cash flows. Um, and these will give pretty much all the information that a business owner will ever need. Now, with the non for profit, instead of the balance sheet and the income statement, we had the statement of financial position and the statement of activity. Now, what the CPAs had me do was look at the statement of activity and analyze the transactions to see if there's anything that's off from the uh, from the year to year. So, what I did was I analyzed the client's fiscal year ending in 2025 to their fiscal year ending in 2024 and looked through at each and every single account to see if there's any mistakes or anything that looks strange. Now, there were several things that were a little bit off. So, for example, like one account was listed at this high of a price in 2024, but then the same account in 2025 was listed like much lower. So I went in and had to analyze and see like what's up, what are they doing wrong, or did something happen, anything big or major. So, for example, like lawyer fees, this is something that might be wrong with accounts like that, or supplies might be down year to year. These are issues that will make these discrepancies. But major ones are usually one to ask the client about and see like are they doing all right. Because as an accountant, it's our job to make sure that the business is to help the business um, understand if they're making profit or loss and what they should do about it. You know, at the end of the day, it is at the business owner's discretion what they do, but you know, we can try and advise them to our best ability. But that was week one of my accounting internship, and tune in again to see what it's when I post week two.